Hello and welcome everyone to Oil Asset of the Day, where we will be going through our oil forecast for the week ahead. So first of all, with respect to oil, it's currently trading WTI crude oil at $56 per barrel. Some points for you to be aware of as we go into this week is, of course, we have seen, again, quite a big shift actually in the overall net long positions from hedge funds and money managers in the latest week. Last week, we saw over a 7% decline in oil prices. And this week, we've seen quite an interesting shift with hedge funds and money managers significantly increasing their overall net long positions on crude oil. However, that has not been reflected in the price yet. For this week, we are looking for the potential of a tap back towards the lower end of the range, which sits at the moment around $55 per barrel. Last week, crude oil prices, they springboarded off $55 per barrel on Friday after Iran's Revolutionary Guard, they were noted as capturing a UK ship in Iranian waters. And with that, we have seen an escalation in tensions between certainly the UK and Iran, as well as the US and Iran lately as well. So you have got that fundamentals in the background right now as well. But again, that hasn't really been reflected in price yet, with us sitting towards the lower end of the range. $55 per barrel, I've mentioned it before, tends to be a bit of a magnetic level for oil prices. So it could be, given that we're trading at $56 per barrel at the moment, as you can see on the chart behind me, we might well see a bit more of a rollover in price as we get closer to this week's API data, which is scheduled for Tuesday after 9 o'clock London time, and also Wednesday's crude oil inventories at 3:30 p.m. So at the moment, the anticipation is we're going to move within approximately a 400-point range this week. Right now, oil looks a little bit vulnerable. It may slide slightly further down to 55, but be mindful that hedge funds have built quite a large position. It's the largest acceleration in net longs in over a year. So I am looking at evidence for buyers to come in. From a seasonal point of view, normally oil does tend to consolidate from mid-July throughout to the end of the month and then start to springboard higher moving into August. That's a typical cycle for oil prices. I would watch out too to see the impact of next week's FOMC statement on oil as well. Oil can often rally off the back of an FOMC statement, particularly of course if we see any US dollar weakness. If we were to see a deeper rate cut, for example, is one point to be aware of. So we might see this week a bit of range bound trade, again looking at about a 400-point range. The upper end of the range would be 57 to 58 US dollars per barrel. As always, you do not want to catch a falling knife on oil. We always look for that evidence that buyers are coming in. So if we were to pull back, we want to make sure that that magnetic zone around 55 was to get well supported. It may be that 56 provides support this week and we springboard from there, make a move back towards the 58 and then eventually $60 per barrel as we go into next week. So the main points to be aware of are the tensions in the Middle East at the moment between the UK and Iran, and also the US and Iran too. That can very quickly escalate, leading into breakout moves on oil. We've also seen hedge funds and money managers, they've increased their net longs, accelerated those net longs to the highest position in over a year. So if we do see a breakout on oil, we might well start to see some short covering there, which could pop the price higher. And also next week is the FOMC statement on Wednesday, which can provide strong support to oil if we were to, for example, see US dollar weakness afterwards. So those are 3 points that I would look out for going into next week. So with that, that has been Oil Asset of the Day. I wish you good trading.